Hello everyone. Today we're going to have a brief market recap, then talk about today's data from the US and Canada, US durable goods orders, Canadian retail sales and CPI, and US personal income, spending, and the personal consumption expenditure deflator. This is Marshall Gittler, head of investment research here at FXPRIMUS, bringing you my opening market comment. Actually, there's not so much to discuss about the markets today. Currencies are basically just churning in narrow ranges as activity winds down for the year. There's little discernible reason why the euro is up slightly and sterling is down a bit, for example. Oil, on the other hand, did fall sharply yesterday after the U.S. Department of Energy announced a surprising 2.26 million barrel increase in inventories. The market was expecting a 2.5 million barrel decline, a fall in inventories. The Canadian dollar was lower as a result, as you may well imagine. The Russian ruble, on the other hand, surprisingly, strengthened anyway. That's because year-end tax payments are coming due now in Russia, and that causes demand for the currency. As for today, there's not much scheduled to make waves during the European day, but when the U.S. opens for business, there's a flurry of indicators scheduled. The third revision of third quarter U.S. GDP is expected to show growth a touch higher than it was previously estimated, but since we're now approaching the end of the fourth quarter, this is more of academic interest than market-affecting news. Now, U.S. durable goods orders are expected to fall sharply at the headline level, but the bottom line for the economy, non-defense capital goods orders, excluding aircraft, is forecast to show a healthy rise. That may prove positive for the dollar. Canada's retail sales, excluding autos, are forecast to jump sharply. That should, in theory, support the Canadian dollar. However, the Canadian CPI being released at the same time is expected to show a slowing in annual inflation. That's likely to offset any impact from the higher retail sales and leave the Canadian dollar little changed at best, or maybe even lower. U.S. personal income is forecast to have grown less in November, but that didn't stop people from spending. Personal spending is forecast to have continued on at the same pace as in the previous month. The data is likely to reinforce the idea of a confident U.S. consumer willing to spend and may further boost the dollar. Meanwhile, the core personal consumption expenditure deflator, PCE deflator, which is released along with the personal income and spending data, is forecast to remain at the same year-on-year rate of 1.7%, close to the Fed's 2% target. That should encourage FOMC members that inflation is indeed nearing their goal and make them more confident in raising rates in the future. So it's positive for the dollar. This is Marshall Gittler, head of investment research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.